Hello there and welcome to Weekly Forecast with TFX at Profit Point, where we're going to be looking at the week that ended on the Friday, the 2nd of October 2020, and the upcoming week which will end on the Friday, the 9th of October 2020. Before we get started, it is important to remind ourselves of the fact that right now we have a lot of political events impacting the market movements, and the best advice for us to be very cautious of these in our trading. And so I want to advise that guys should restrict their trading to a certain session of the market, whereby you can decide to trade maybe the London session, and then you take a pause to see how things are developing right in the political atmosphere, or probably you just wait to see how things are developing before you can then decide to trade maybe a New York session or somewhere between New York session and the European market close. So this is an advice that we want to give right before we go into our analysis, right? Okay, because we saw on Thursday how the politics impacted the market on Thursday, right, where we have this heavy movement in Wall Street index, bearish one, because of the announcement, right, of President Trump and his wife contracting COVID-19. And then in the afternoon there we had another news that bidding was tested negative, and then the market zoomed up again, giving us a kind of seesaw movement right here in the market, right? You might say this is a Wall Street index, okay, but then what of GBP USD, where you add that kind of movement also, okay? What of Euro USD, right, which of course that happened, but then it's a bit mild on Euro USD, okay? What of Euro GBP, where you have that kind of movement also, a kind of slide in the market there, okay? What of GBP AUD, where you have that kind of movement also, right? So basically, right, also if you look at Nasdaq, right, which experienced a serious slide there, right, and then S&P 500, which also give a kind of seesaw movement there. So in other words, we might want to stand with this advice to trade as advised to cushion the impacts of politics on our trading. That said, let's get started. This week we're going to be looking at Wall Street index, which is offering a lot of opportunity now in trading, and then we're going to look at a couple of other assets which might include GBP USD and the UK100. Let's get started. For Wall Street index, that is DJIA, or what we call US 30, right, we have this sort of setup that's been taking place on a larger time frame. So if we look at on the daily chart here, we have this recovery that is in this form of a bullish pennant here, right? And then because of the happening in the political atmosphere, right, a stimulus bill experiencing some sort of agitations in its approval, we have this slide that took place right over the course of last month, which was September. Okay, so if we zoom this in now, what we have now is that there was this sell-off for 4 weeks, right, in the month of September, and then after that we now have this kind of slight retracement from that slide, majorly, right, offered right on a daily time frame here, as a result of the EMA appearing here, giving rise to this double pin bar and then giving us this retracement. So technically speaking, now we are in this retracement here, and then if you look at this putting a Fibonacci here from the beginning of the sell-off last month to the lowest level the sell-off was, we have right now total of about a 50% retracement of that sell-off towards the end of the month and as we begin this new month. So Wall Street index is, they find it difficult to trade significantly above the 50% Fibonacci retracement, and now we have political events right now impacting this. So essentially, technically speaking, what we have here is another pennant here, right, rising wedge that we have here, right, which we have here on a bigger scope, and then we had this slide, and now we are having it here on a smaller scope here, and then we are about to have another slide right in this direction. Now if politics played out and then on Monday we had this Wall Street index opened below the lower boundary of this rising wedge here, then we can expect, right, a slide, right, of this kind to take place here. But technically speaking, if that doesn't happen, right, we stay close within this pennant and wait patiently until we have a clear breakout of the wedge before we can resume, right, a clear bias on this. Okay, so that's that for US 30 or Wall Street Index. Okay, let's get to UK 100. For some weeks now, like 2-3 weeks ago, I did mention that UK 100, right, is being undervalued compared to the highest level it was trading from the beginning of the year, where it traded for almost 8,000 mark, and then because of the pandemic, right, it went as low as the 5,000 mark, right, regaining a maximum of about 618 retracement there of the sell-off. But right now, what we saw for the past few weeks that I mentioned this is that I said we have this falling wedge here, right, which is sort of a bullish reversal pattern that took UK 100 into 382 Fibonacci, and then it's been playing there for some weeks now. Okay, and I did emphasize that we have a lot of room to the upside here, where we are expecting that it's very possible that UK 100 could trade right in the upper side. Right now, I strongly believe that this is now the time for that analysis to play out. Okay, I shared this on Facebook yesterday evening that we have waited patiently for this, and I think this is the time for this to play out. How do I mean? Politics is impacting, right, on the DXY, right, the dollar index, and then impacting on the US economy. And then what we are having now is that people, right, investors might see, right, opportunity, right, to now go and invest in the UK index there. Okay, and so what we are expecting now is that if this now is able to break above this temporal downtrend line, which is been attempting to break here where we have cluster of price action, and it's been attempting again to break here because of the cluster of price action, and if it's not able to break above that, we should see, right, UK 100, right, attempt the 6,000 mark, right, and a break of the EMA at that level should see UK 100 trade, right, again into the 6150 mark, right, which is about 5 weeks high there, and after that we should see trade into the 6300 mark, 8 weeks high, and that could now signal, right, the momentum into the upside, where we can then have the UK 100, which can eventually now trade as high as where we forecasted, right, a price of 6,500, right, and then possibly, right, a price of 6,800, right. Okay, so that's what we're looking at on UK 100. High probability setup here, where we are sure to make some significant peeps, right. Okay, and that said, we are looking into trading these, right, during the high liquidity sessions there, right, as we mentioned earlier at the beginning of this video. Okay, now I want to look at WTI crude oil, right, which we've seen that WTI crude oil is been experiencing, right, sell-off, right, for the past 1 week, right, after it recovered from the previous sell-off. Okay, so now it's back down to the $37 mark, right, and so we are looking into its ability to again break below, right, this region that we have here. So in view of the second spread of the pandemic, right, so we are looking into crude oil being able to break below this, right. If this place offers a strong support and is unable to break below these, right, for the first few days of the week, right, we can as well see, right, a rebound of the WTI into the upper side. The key levels to watch if that rebound takes place, right, will be, right, this level here, which is about the $39 mark here, right, and then after that we should be looking at the $40 mark. But remember, some weeks ago I did mention that with what we have now in the political atmosphere, where a president in the United States seeking for election, right, is much more interested in influencing the market such that the price of crude oil should not be too high, right, and should be affordable, right, for the people. And I said that we can see WTI start trading between the $40 mark, right, and the $35 mark, right? And that's what we've seen, right, so far for the past 4 weeks, where it's been trading between these two levels. So we might not be surprised that these might go back, right, 39, 40, and then back to 39, 37, 35, and going forward that way. That's what we might see play out concerning crude oil. So this essentially gives us and offers us opportunity for sort of a swing trade, right, between the $40 mark and the $37 mark. All right, so that will be all for now for this video, right? More video will be released in the course of the week as the opportunities present themselves and as we see some interesting high probability setups there, right, that will be released, right? Some will come in form of 1 minute video, 2 minute video in course of the week. So stay tuned, right? And please remember to hit the subscribe button on this channel and possibly share, right, this channel, right, so that we can have more people to benefit from what we are dishing out here. Thank you very much for listening. This TFX again at Profit Point, and I'll see you in the course of the week. Thank you very much. Bye for now. Peace.